Ajit.
Hey Connor, thank you for the kind words.
Oh, it's good. It's
Yeah,
good to see you again. Been a while.
good to see you again. How are things?
Yeah, they're going well. Keeping busy, and it's just it's a wild ride, this space, isn't it? In terms of everything that's been going on over this last 12 months, especially since the DeFi summer of last year and that.
Yeah, absolutely. I think it's a great time to be in this space. Yeah, I mean, obviously we're not done till the EA launches a token, but yeah, I mean,
Yeah.
it's a very exciting time because of all the cool things people are building.
Yeah, absolutely. So, wanted to get a bit of your backstory as well, though, because like I said, you first at PwC and then ConsenSys, but then what was it that attracted you to Aave? Because you went on board there. You've been there for a little while now, and it wasn't, Aave is like such a well-known company now in the DeFi space, but you weren't you were there before it really kind of went bonkers as it has done, right?
Yeah, no, I think yeah. So the I think DeFi has had a lot of attention, right? So when I started talking to Stanians last September, I mean, it didn't feel like DeFi for institutions or would kind of be a thing. And at that time, it was. But I think it was pretty clear. Stani always thinks 3-4 years ahead at a minimum, and he was doing ETHLand in 2017. So last year, he I think wanted someone to go talk to all the institutions about DeFi and then start to kind of really push on that agenda. So yeah, so I given all the work I had been involved in enterprise, just talking to financial institutions and all of the regulators and agencies day in day out. I thought it was a good place to to try and make do something that's interesting early and really yeah, it pushes the space forward. So I'm feel very lucky to be part of the Aave community and the team because it's just they just keep building. I mean it's an incredible community in terms of innovation and I think Stanley has built a terrific brand as well by just I think doing the right thing and continuing to build at pace, which is yeah. So I'm really happy to be part of this.
And how do they manage to keep up with all this stuff? Because it's like you've got this institutional business growing, and then there's like Aavegotchis, happening on the side as well, which is just like a, completely separate thing. It's remarkable to see that, and you had obviously flash loans as well that started to, that people started doing, and just it's
Yeah,
crazy
yeah.
everything.
So Aavegotchi is not an Aave project, as in it's a sister project in the sense that it has its own team, and some of the Aave team members and community members are investors and stuff, and support Aavegotchi. We also have a fair amount of communication with the team in terms of they did a fair bit of work on Polygon and knew a lot about Polygon before we deployed. So Aave, I think the core areas of innovation in Aave, there's lots of stuff in the community, right? And then there is the Aave companies. So the distinction is quite important. So in terms of the work that's going on in the from projects that start from the company, now we have someone doing experiments full time, just experiments and trying new things. Then we have some work going on in this, some very interesting work going on in the social media space, which will, I think, be announced towards the end of the year or early next year. There is Aave Arc, which is kind of, a platform for permission DeFi. I think adding KYC to DeFi has been a 9-month journey, and I think that creates opportunities for institutions to participate in the protocol governance, in the level of innovation that's there in the system, and then also, gives an opportunity to create a composable ecosystem of DeFi protocols, starting with Aave, where a lot of new and interesting institutional friendly products can be created through composability. There's a whole bunch of protocols that will follow into that ecosystem. Then there is, there's some work on the fintech side because, the DeFi is sort of the backend infrastructure of finance in the future. But then there is the distribution side, So the distribution, a lot of the distribution will come from Web3 native experiences like MetaMask and different wallets. But for a lot of there are 8 billion people in the world, and DeFi has only reached somewhere around 10 million, 15 million. So there is a long way to go. And a lot of that distribution will come from CeFi, from fintechs, from institutions. So there is we're doing a fair amount of work now on the fintech front as well. So I mean, Aave, the team and the companies, the things that we are working on is a relatively small part of the just the sheer amount of innovation that's in the Aave ecosystem, with protocols like Gelato, protocols like Notional, Swivel, just a long, very large AP mine, a whole bunch of DeFi protocols using Aave liquidity and source code to innovate. And then, there are hundreds of Aave forks out there, which are always making some or other revolutionary changes on different chains. But I think what's really cool amongst all of this and quite imminent is, Aave V3. V3 is a set of major changes on the Aave protocol. First of all, offering a truly cross-chain experience to users, making it kind of sooner. So the long horizon in crypto tends to be 6 months. Vision is to allow users to interact with the Aave protocol irrespective of which chain they are on, right? And then they just interact with Aave irrespective of which chain that particular instance is on. So that involves a portal framework which allows bridging technologies to connect different Aave pools on different EVMs. And then there is a bunch of work around capital efficiency, which just improving the LTVs on stables, limiting the amount of liquidity in any pool that any particular address can borrow, to improve the credit risk safety of the protocol. There's just a whole bunch of other stuff that's coming down the pipe, and now the team is also quite a bit bigger. So when I joined, we were approximately 19 people. I was probably 20th or 21st. Now across all of these areas, I think we have 75 people. One of the things we did when I joined is we joined the EEA. And we started the DeFi interest group. So the EEA has a DeFi interest group that I think everyone from enterprise, blockchain or enterprise DLT background will particularly find relevant and useful to contribute to and to participate in. That should be a DAO at some point, but it's not yet. So we'll see how we get there.
Yeah, it'll be great to see when more traditional enterprises start. You're making use of DAO type structures as well.
We definitely need an EA DAO and a dollar EA token, right, for that. So
yeah, exactly. And so, like you mentioned loads of different initiatives that Aave's working on there, but to go a bit deeper about V3 and the cross-chain angle. I presume that initially it's more about bridging together, as you said, these different Aave platforms and different protocols. So we've got Ethereum, we've got Polygon, I think Avalanche, and no doubt others in the mix. Is there a plan to make it a more kind of generalized DeFi interop layer? Because of course this is one of the areas that people struggle with respect to moving. Moving assets between different DeFi ecosystems. Often there's a different blockchain in the way that creates a friction point for them.
Yeah. So first, I think more importantly, fragmented liquidity is bad. Or rather, having a single large global liquidity, permissionless liquidity pool is across cross chains is fundamentally better than having multiple siloed liquidity pools across different chains, because a bigger market for liquidity is a more efficient market for liquidity, right? And if you have 20 billion in USDC, and that creates a much bigger institutional, or rather a far more liquid market for borrowing USDC than if it's fragmented across 4 or 5 different pools. So now, ideally what should happen is, irrespective of which chain you are on, right? So you deposit on Polygon, that liquidity should be instantly portable. And if you want to borrow from so let's say you deposit collateral into Polygon and borrow from Avalanche, that should be possible. Now, obviously, that's a lot harder. What we're doing in the near term is making just the liquidity somewhat portable across through bridges across different deployments of the Aave protocol. So across different pools and different different blockchains. So depending on where that bridging technology ends up in, we've seen lots of interesting approaches with optics, with the wormhole, with CCIP, and a different variety of different approaches. So depending on where the cross-chain liquidity and technology evolve, I think we'll be able to do a lot of interesting things and have ideally at some point have a single giant permissionless Aave market cross-chain. Which the governance is already cross-chain, right? So there isn't a native token for Aave on different on Polygon or on Avalanche or something. So I think cross-chain governance is already there, which makes the protocol gives a single point of governance, which is really important. Then I think you're gonna have to give me. So I've tried to explain the vision in terms of what needs to happen, but I think how we get there will depend on the state of the tech in the next I think in a few months, and that's evolving quite quickly.
And given the overall speed of evolution, I mean, are there kind of worries about whilst Aave is like the leading lending venue right now, the rate of change can be so rapid here, and as the Uniswap experienced with PancakeSwap emerging, are there concerns and there that the team has and plans that they have to try and help prevent these sorts of things that could disrupt them down the line?
I mean, there is a governance proposal out there on saying what should the licensing approach be for the Aave protocol, right? So that's not a decision. That's a decision the community needs to make. I think it's worth looking at that proposal and seeing what makes sense. But then it also becomes if there is intellectual property, then who owns it? That's still evolving. And how do you get like the DAO or the community to essentially own the intellectual property around the protocol source code and things like that, and what does that actually mean in practice? So I think some of those things are evolving, but it's conceivable, and ultimately it's up to the community, right? So Aave community is a varied set of interests, and I'm sure there are some people in the community who believe there should be no KYC on anything, or there should be no license on any software. And there are members of the community who probably believe the other way around, right? So I think it's one of the things we are done very well, and something I'm very proud of at the time I've been here, is how hard we have pushed on decentralization and sort of community ownership as opposed to any sort of unilateral decision making from the Genesis team. I mean, we haven't done that, and we have really pushed as much as like full ownership of the protocol and any assets related to the protocol in the hands of the community. And ultimately which way the community decides, it's not some token holders decide, is not something I think we can comment on. But then yes, it's possible that the DAOs will at some point start to own intellectual property. Some already do, and then it's possible that one of the DAOs in the Aave governance might hold let's say some intellectual property that's built along the way. But right now, obviously, Aave is fully open source, and there are folks, and sometimes better and sometimes worse, but mostly worse folks of the protocol. There isn't really any moat in DeFi. I mean, if you are a token holder and your intent is governance, then you don't particularly it doesn't bother you that much. But if your intent is beyond, then obviously there are token holders that would want the protocol to preserve some sort of IP. So it'll be interesting to see how that evolves. But at all points, it's really important to keep it 100% decentralized.
Yeah, and it's great to see that there's there is such a strong community around it because of this adherence to focusing on the decentralized angle.
Yeah, and
So
there is no moat, right? So there is no moat in DeFi. I mean, Uniswap might have, labs might have, an IP or whatever, but if somebody goes to Macedonia and Anon deploys a fork, then there's not too much you can do about it. So I think that's not the right mode. The mode is really the culture, and and just, I think if you continuously build new, interesting, cool things and improve the user value and experience, then after the exuberance, you gotta at some point build for the long term, right? And right now, crypto lives in narratives, and right now everyone is going GameFi, and tomorrow, there was a few months ago, everyone was buying PFPs. Next year it might be some other hype, but that's just life in our space. So at some point you gotta hunker down and just say, look, what are the first principles here, and maybe we'll let the hype be as it is and just continue to build useful stuff.
definitely. I mean, do you guys worry about moats starting to emerge though because of regulation as it gets established for the space? Because of course, right now we're at this place where there's a lot of work being done by regulators, looking into how they should be approaching DeFi. I'd love to hear the perspectives there.
So regulation is definitely a force of decentralization, right? If you will, then we have seen a lot of protocols in the ecosystem become more decentralized as a as an impact of regulation. The regulation is also, I think, the main challenge is education. So a lot of the people from traditional finance or trad reg, if I may, traditional regulation, have a very sort of a mind map which allows them to only fit everything into the current frameworks or the things that were written in 1930s. So a lot of regulation needs to become digital and technology first as well, and regulators probably need to hang out in the Discord chats and the DAOs and the Ethereum developer conferences, so that they get a slightly better feel for what's going on. Because right now what they're getting is news from Financial Times or Chainalysis, or one of those big fudgy numbers saying, hey, this is the level of risk in DeFi, but they're not seeing is the level of opportunity that's there in DeFi and in all of the other things that are going on in Web3. So it's important to balance the risk perspective with opportunity perspective as well, and then so that sensible frameworks can be designed. But yeah, regulation, you can't scale to a 3 trillion industry and expect there will be no regulation and everyone can be left to do whatever we were doing when we were a total $300 million TVL industry. So there's going to be obviously some rule making and so on. And I think we are working very constructively with a variety of agencies around the world, regulators. We've been very proactive in talking to regulators for the last at least year or so, and really doing a lot of work on education and TradFi, in sort of also through the EA. I think that this is where the EA has a major role, right, to really bring its traditional finance audience and enterprise audience to kind of just show what's going on, right? And I think it's that's why we sort of pushed very early for an EA DeFi interest group, which is kind of growing slowly. Hopefully will grow a lot faster, so education is the only answer to that, and just constructive engagement with policy institutions across the board through education, advocacy, and just constructive work, right? And not just going on Twitter and throwing your toys in the pram saying why is there regulation? The regulation is a fact of life. I think we have to work with regulators and policy institutions to build something that makes sense.
So given that against that landscape with regulators and the whole education piece, do you think we're close to actually seeing some DeFi regulation emerging, like say within the next 12 months, or do you see it's going to be further out?
100%. I think we will see, first of all, interpretation of existing rules, and there are a lot of existing rules. And then we will see some new rule making and modification to existing, frameworks, and then also more RegTech tools. I think I'm very bullish on on some of the reg tech that's going to come into this space as the space matures and scales. You go to 3 trillion, that's great, but how do you go from 3 trillion to 30 trillion? That's not going to happen without any reg tech tools. So there is quite a bit of opportunity there, I think, going forward.
Yeah. And so on that, steering the conversation through to Aave Arc and their KYC platform, it was announced, I think, just before the summer initially. And you touched on it earlier on, and I think I've read that it's about to launch, or we're kind of close on that. Forgive me if it already has, but it would be great to get an update on that, because it's certainly a very promising initiative.
So it should happen in 2 days. So the governance proposal is out there. It's already passed. Quorum was reached. I was surprised that there were no votes against it, right? To be honest, I think what happened is when we started in March, and Stanny tweeted, then a lot of us DeFi degens like me, and I mean a lot of us were up in arms saying, why is KYC on DeFi? And I think what has happened over the last year or so is because of all the newswire and all of the I think a lot of everyone in crypto community across the board has become more aware and more educated about where things are going, and I think Aave Arc is sort of gives consumers an optionality, right? So if there are certain entities or users that can only access permission liquidity, then they can do so, and if they can access permissionless liquidity, then they should do that. So I think it was pretty clear that there are certain institutions and entities that can only access permission liquidity for whatever internal or other reasons. So it was important to sort of create a choice, and I think Fireblocks have kind of led in that front, and taken it upon themselves to really. Now we're getting a lot of interesting ideas in the ecosystem, right? So there's a whole list of DeFi protocols that want to be in the permission space and create a composable ecosystem with us, the Aave community. So that's that's phenomenal, because that'll create a whole other level of innovation in the enterprise, right? And the second thing is. There is it gives, I think, a lot of it's one thing to take a PowerPoint to an institution and say, look guys, this is how DeFi works. It's quite another if they have someone with a Fireblocks wallet or a MetaMask wallet actually directly connecting to the Aave protocol after having gone through compliance and risk and all of their internal processes, and then starting to get onto the Discord and Telegram. So I think there's no better way to learn than use things about DeFi than to use DeFi, and I think this creates an opportunity for institutions to use DeFi and in the real world, right? And without sort of hiding DeFi from by essentially either. So there are protocols that are like semi-centralized or federated and use some of the on-chain infrastructure, but essentially exposes the centralized interface. Give us give us your fiat and we'll somehow magically return 4%, and we will deal with DeFi. That's not the approach with Aave Arc. The approach is, look, this is DeFi, this is what it looks like. You want to try, go ahead, right? I mean, and it's actually a functioning market that can scale. It's not just an experiment or a sandbox. If but it gives you institutions and entities a choice to interact directly with the DeFi protocol in an environment that's familiar to their compliance and risk people, right? So, and it sort of also creates hopefully some liquidity, significant liquidity for innovation, and where, let's say, funds and TradFi or crypto native institutions can essentially build their own products using permission liquidity that and then offer those products to their consumers, because with DeFi is just software for infrastructure, and that infrastructure Aave is a software company. Aave builds software. Aave community is great at building software. Now, if some institution wants to offer a financial product to their customers using this technology, then that just opens up a whole other level of innovation that can happen in the fintech ecosystem.
Definitely. And certainly what you said there about the community angle being involved, I hadn't realized that the Aave community in effect had supported the whole notion of Aave Arc there too.
Yeah, no, they did. I mean, nobody did in the beginning, So I think March was a very different emotion, and come to December, I think there has been just so much news flow that I think people have changed their views a lot, right? So I was expecting a lot more debate. But I think because there is a general sense of awareness in the Aave community and in the DeFi community and crypto community as a whole that distribution also matters, right? And a lot of distribution will come through TradFi and traditional institutions and fintechs, and then fintechs will essentially open up, create products and offer those to their customers using the DeFi rails. So I think there is generally more awareness of and the fact that the protocol is permissionless, right? So the Aave protocol is still permissionless, but there is an option users have, if they're restricted from using permissionless pools, then they can use something else, and that's just a matter of choice. And I think the community has supported that notion, and that's really helpful.
Yeah, absolutely. And talking, expanding a bit further on the whole convergence of TradFi and DeFi, and so there's one part of this which is where you have consumer demand driving it in terms of consumers are seeing the sort of yields that are available in DeFi, and then you have financial institutions looking to bridge that gap. There was Coinbase Earn, Circle have got things there, BlockFi have got their USDC interest, and so we're starting to see some of this emerging. But where do you see being the other kind of growth areas with this, and especially for those institutions that maybe are much more, they're focusing on the wholesale markets, for instance, where there could be kind of opportunities there? Because existing finance is very much so a walled garden, and the barriers to entry are very high. And then you have DeFi here, and from the the individual perspective, of course, and those people who live in places, for instance, where they don't have quite the same like a sound monetary systems around them, of course that's very appealing. But what's kind of the thing that's going to get some of those more traditional markets across to DeFi, apart from the yields, or how do you think that could shape?
Yeah, so I think financial institutions are full of really smart people who want to innovate and create products for their, and remember, I've been before 2010 or 2009, I think, at Goldman, I remember having done a lot of interesting things at a really rapid pace, like we're doing in DeFi now, right? So I think after the financial crisis, it's been a very different story in TradFi in terms of innovation, and innovation is really blocked by just the sheer set of rules that are out there now, and there's a patchwork of rules and it just keeps adding up. So TradFi is the cost to income ratio of Deutsche Bank that I love to cite used to be 60-70%, and then 80, and I don't know where it is right now. So it's impossible for TradFi to serve the marginal consumer. The other thing is transparency, right? So we presented to the Bank of England, and we're talking to some folks at the Fed, and so the question of financial stability and systemic risk always comes up, and with the level of on-chain transparency that's there in DeFi, hopefully, I think one of the things that we've learned is when TradFi systems go down, DeFi protocols continue to run painlessly, right? And so there are many centralized entities that are trying to deliver, a magic 4% return, or through various complex trades, and that's a perfectly reasonable thing to do. So we are not. I think what we're doing is we're trying to change the fundamental, sort of bring on chain, this whole, we're going from enterprise blockchain to blockchain enterprise, right? I mean, if you wanted a punchline. So remember, we used to talk about, so how do we get blockchain into enterprise? Now we're not talking about that anymore, right? So we're saying, look, the blockchain is already there. It actually works, right? So there is 31 billion on it. I mean, if you want to generate a yield, here are opportunities, right? If you want to, and through a very liquid clearing market for interest rates, go ahead, use it, and get your hands dirty and familiar with the Web3 experiences. Get your MetaMask wallet or Fireblocks wallet, and then just connect directly and experience it, how it works. Come on board with decentralized governance. Create proposals and ideas that extract or create value for your institution and your customers, right? That's the protocol politics and the whole aspect of collective bargaining, all of that in DeFi is really important. See what we can do with NFTs. I've been surprised by how many crypto native institutions are actively involved in non-fungible token markets, and And so it's a lot of those, ultimately the role of institutions is to create wealth for their customers, right? And that's whether it's retail or whether it's high net worth or whoever it is. But I think what DeFi will do is it will allow them to access liquidity at a much bigger scale, in a far more transparency and in an automated way, which is not possible with centralized crypto also, right? I mean, with centralized crypto, you probably have 5 guys trading day in, day out and doing a grayscale art to somehow deliver 4%. With DeFi, it's straightforward. With Aave, it's a straightforward automated system, no human beings, no manual intervention. So the cost of everything can be far, far lower than anything that's possible in TradFi, once this tech matures a bit and all that. So we are kind of seeing something remarkable in very, very early stages. Now, one thing I should warn in my rambling talk is Netflix was shipping DVDs in 1998, but they were talking about streaming back in 1998. And it took until 2012 to really get streaming at web scale, right? So I don't know how long this will take to really go to superfluid finance, if you will. With DeFi rails, with robust DeFi rails, the sort that Aave has built. But I think that's the idea, right? How do we drive more liquidity on chain? How do we get institutions more involved in governance? How do we get all of that TradFi talent directly involved in innovation in the ecosystem? So I think it's Stani, and I think the rest of us are sort of early pioneers in this space, and Stani and Maker guys really, really early, 2017. So I think we've got to a point where it's this movement is kind of just rolling down the hill, and momentum is on our side. But it won't automatically happen, right? I think the market conditions are also very, very favorable, and which gives us an even more of a sense of urgency to really make a dent in this universe a bit. So Aave Arc is just one protocol, and then there is a whole, I think, long list of innovations that's happening right now.
And on that, what are some of the other, like, I guess, big innovations that you're kind of watching eagerly there?
I think there's a significant amount of financial engineering talent that's come in, right? So we're seeing Aave liquidity being used by market makers, like flash loans for extracting arbitrage profits, and that's there are some pretty significant institutional market makers that are doing that. Then there are protocols that are building things that are really hard, like Barnbridge, trying to build interest rate risk tranching. It's really hard to do, right, unless the rates are high, and the rates aren't very high right now. There are you can trade future yield, which is a bit like having a swaption or an interest rate futures type product. Then that's AP Wine and Pendle and so on. Then there are interest rate swaps people are working on, swaptions people are working on. Then there's a bunch of ideas around real world assets that Centrifuge are working on. Centrifuge and Aave presented to the EA DeFi interest group last week. So that's a really, really interesting project. I think John must have a recording of that. And then John Ho, and and most things I don't even know right now, because the attention has kind of shifted a little bit in the market to GameFi, and gamifying, embedding DeFi inside a game like Axie Infinity, which is creating a whole market for NFTs, and I'm talking about institutional markets for NFTs, right? So who thought that institutions will want to invest in or trade in a bunch of cats? Or actually not even cats, some kind of Pokemon cats, but we are seeing, and that's starting to drive, to bring a lot of the expertise. So some of these things exist in TradFi, right? It's very, very hard to invent new finance. In fact, most of the times, if something is being built, then it's at least the math and the logic, the economic logic behind it already exists. But a lot of those things are now starting to come into DeFi, and with people really creating interesting, products around by splitting risk into, different buckets, and then bringing different type of risk exposures into financial products built on top of the core DeFi layer. But the most interesting things are really, just the simple ones, which is which are things like how do we go from 10 million to, so the things that are most interesting to me are the core infrastructure, right? Reducing gas fees so that everyone can come on board DeFi, building safer Web3 experiences, better wallets like Frame, and also Rainbow, and Argent and so on, right? And then also integrating fintech directly into DeFi, so that mobile first experiences like Revolut and others can be offered on DeFi rails. And so these simple things are far more interesting because of the level of scale that we can reach, and obviously the work around security and privacy, because privacy is really important in the long run for decentralized finance, and on-chain privacy of data, identity. But then there is a bunch of other stuff around reputation systems, RegTech, credit risk ratings, and how do we bring all of that identity and reputation with security and privacy, right? Because if you have identity and reputation but no privacy, that doesn't work. So I think it's really the work in the core tech from Aztec, from Hermes, from the folks over at zkSync and Starkware. That's really important, and that's far more interesting to me personally than all of the financial engineering, because we need that tech to work for all of the financial engineering to work at scale.
Yeah, they are absolutely those core building blocks. Are there any significant risks in your mind to DeFi more generally? I mean, of course, there's the one, more extreme one, which could be regulatory, but I think the consensus seems to be that the regulators have been kind of pragmatic to a degree. But outside of that, are there any things that you think could be big risks to the whole industry?
I mean, yeah, so it's the space has to grow up, because so we grew really fast, right? We went from 1 billion in Jan or March to now at 250 billion odd across different chains. So a lot of what the hell happened here, right? So I mean, and a lot of that came from just the favorable market conditions and macro, and just the sheer amount of risk taking and wealth in the ecosystem. A lot of people aped in, right? And that's great. But now, so sometimes, but there are some protocols like Aave and Maker and Compound and Uniswap that have kind of robust, stable code bases, 5 or 6 different audits, access to some of the best developers in the ecosystem, and so on and so forth. And these are relatively mature and robust. And but there is a lot of new things that people are building, and there are things built by anons, and so at some point, and I'm kind of one of the older folks in this ecosystem. So if you are asking me, so then at some point, I think standards and practices and behaviors will emerge. I think there will also be more self-regulation. So I mean, aping is great till you get to a few billion, but at some point, aping is still great, but then it's not for everybody, right? As in, I'm not expecting my parents to ape into DeFi. When they come into DeFi and deploy their pension, then hopefully they have some more safety and comfort. So we're not ready for them. We're not ready for my parents to deploy their money in DeFi, and I think the goal is to get there, right? And that requires better frameworks, better better technology, better or I think a lot of that distribution needs to come from TradFi, right, who have those sort of customer relationships and so on and so forth, and the legal and regulatory frameworks also. So I think we grew really fast, and now we also have to grow up really fast as a community. So and I think that's coming, right? And we're seeing more education, more constructive engagement, less of the knee-jerk reactions on Twitter saying, oh, no, we'll do what we want. So I think now it's a growing and growing up tend to go together. So that's where we are in this ecosystem.
I think that's a great kind of way of describing success, when you can actually feel comfortable getting your parents to put their pensions into this ecosystem. That's
definitely the goal, right?
Gold standard.
We have to get there, because until then we're not done.
Awesome. Well, yeah, Ajit, it's been really great to speak to you today. If anyone wants to kind of
I was late in the beginning. Yeah.
That's all good. That's all good. If anyone wants to reach out to you, what's kind of the best way to engage?
Yeah.
Via, social or whatever else?
Yeah. So I'm Chain Yoda on Twitter, and my Twitter account is a bit entertaining. So, so for Aave, obviously it's aave.com. We have a Telegram channel, a Discord channel. But I think the EA DeFi interest group is a great place to, hang out and also, go from enterprise blockchain to blockchain enterprise. There is a Slack for EA DeFi interest group. For me, Chain Yoda is the Telegram and Twitter, and then for Aave, we have a variety of channels. Just go to aave.com and it's all there.
Awesome. Well, we'll wrap up there, and thank you again, Ajit. It's been great to hear what you've been up to, and also just to catch up.
Thank you, Connor. Always a pleasure.